this is what you have calculated. This much I can scale till 6013. Only cycle 2 you have achieved. Till 17th I have calculated with one expectation, optimum expectation of 6013. We have attended till 5882. Previous weeks also I have calculated in the same way. Next week also I am going to give you some levels tomorrow or day after. So these are the things is being calculated using the GAN and volatility principle. The volatility principle, though it is beyond the scope of this particular lecture to explain you that how I have calculated these levels. Rather, I will give you one hint, one opening for this volatility technique. So if you show your interest, if you start learning, then you also can able to calculate in this order. Many are calculating. This is those who have, many of you have bought my literatures on the GANs. Many of you have joined my paid programs earlier, free programs earlier in different cities. Many of you have attended these free events earlier also. So out of those participants, many are now equipped to calculate these levels of their own. They can able to calculate these trends and they are following this trend. There is no meaning if you can just calculate but never follow. So just if you put your email ID and hit the subscribe button, you also will be a member of this group, and once you just type your email ID here and just subscribe in the contact us link of our website, so you will be a member of this group and all my newsletters will come to you. So the point of giving that newsletter is not to show off that yes, I know only this calculus, means I know only these projections and I only can tell you that where market will move. The main aim is you should learn that techniques. Main aim is, all my endeavors, it is my aim that you must learn these techniques. You must equip yourself for this technique. That is the technique you are going to learn today. You are going to learn the volatility technique in its basic preview. It has many advanced nature into it, like the trend part what you have seen just now. So same literatures, one basic part which you can able to translate into your intraday trade practice, that I am going to display, that I am going to teach you. And those who are already possessing the literatures on the WD GAN, those who are already possessing the literature on the volatility, to them I'll strongly suggest, it is a high time, you must, if you have taken those materials and kept it on the shelf, just open up that shelf and bring that material back to you in your desk and start reading it, so that you can able to calculate the market in a very, very precise way, and you can take fantastic benefit out of that also. So this is what this technique is. Now let us move into the subject session. How we can do intraday trade using volatility. So here volatility and Fibonacci principle will be used for trend finding. Volatility and Fibonacci principle will be used for the trade forecast, and we will backtest this method of also for a couple of days to know how powerful this method is. So what we are doing here, first we will be calculating the volatility, then we will be calculating the expected price range as per volatility, then we will identify the trend, trade entry, profit booking. This is what our steps will be. So these are the steps once we are going to follow. This technique is quite mathematical. So if you have any allergy towards the mathematical concept, then I can't able to help you. But this is the only one technique which can give you a precise method to do intraday trade. So what I have done here, so just we are going to take the last 10 days data, last 10 days, last traded price till 20th September we are taking. 21st we have the Saturday, 22nd is Sunday, 23rd we will be calculating the levels for 23rd. So what I did here, so last 10 days from 6th September to 20th September, last 10 trading days data I have taken, and I am going to calculate the volatility. I have used a function called ln and the 10th September price divided by the 6th September price. This is what I did. Then whatever the value I got here, that thing's square I have taken. So this is how I have taken the ln values and ln square values. After calculating this thing, for all remaining days also I will be doing that same thing. I have just copied and pasted it here. So then after I have taken the average of this. Whatever the ln I got, that average. Whatever the ln square I have calculated, that average. Then I need to calculate a factor called variance. For that, whatever the ln square I have calculated in this D column, this one. So this part I'll be taking, and I'll be subtracting this from the whatever the things I got in the C part. So I'll just color it off here. So whatever the things we got at this average of D columns minus whatever the value we are getting in the C, that's whole square. So this is what the variance is. Once we got the variance, so then what do we have to do? We have to take the square root of this variance, and we want the volatility to show us in the percentage term, so we need to multiply it with 100. So what it has given? Till this point it is volatility. It says from the past 10 trading days data investigation, it says the volatility of Nifty future is 1.68%. That means in the coming days, so D column whatever you have got minus C whole square. So this is what. So this means on the Monday, which is coming on 23rd, we may expect the Nifty to move by 1.68%, but we do not know whether it will move up or it will move down, or it will just move between one range. So that part is not known to us. Only volatility has given us the information. We may move with a range of 1.68. We may move lesser than that also. This is a probable level we have calculated from the past 10 days data. We may move more than this 1.68 also, but somewhere we have to stop the thinking. So we thought and we presume and we assume that Nifty will move by 1.68% on the coming day. So let us translate into the pricing term. So pricing term 6047 was the last traded price on the 20th September. So I am just multiplying it with this 6047 last traded price on Friday multiplied with 1.68, the entire result divided by 100. So this has given me, if my assumptions come true, then I may move by 101, this factor, if I'll solve it, 1.67 points. This much of point I can move in the pricing term. This is last traded price. I'm repeating again and again, this is last traded price of Nifty future. So 101.67 is the number of points we can scale, but we do not know whether this 101 points will be between a high and a low, or it will be opening at a price and scale straightforward way 101 point in the upper direction, or it can open at a point and fall down by 101 point. So that part is not known to us till this point. So this 101 point, once we have found out, now we'll be just taking that 101 point, we'll be just taking and the last traded price into confidence. We can say if we are moving in the lower direction by 101 point, then we can move till 5945. Same way, if we can move by 101.67 upper side, we can move till 6148. So we assume 6148 in the upper side, 5945 in the downside. This is the range in which we can move. Mr. Juneja, future I am taking. Future is a tradable quantity. Spot is not a tradable quantity. So be clear on this front. You are going to trade in the Nifty future. Spot, how you will trade? Spot you cannot trade. So here two things you will be getting. One is the last traded price. Another is the settlement price. You have, this is a weighted average price. This is the true price what has happened on the chart. So this is a true price at which Nifty is got traded. Henceforth, take the price of last traded price into account while doing this calculation. Though it is couple of points up or below, but that things make the calculation more correct. Fine. Now we'll be using the Fibonacci points. So here the 101 point we got. So what is the Fibonacci ratio? 236 is the first Fibonacci ratio. Then second Fibonacci ratio is 0.382. Then the 0.382. So this Fibonacci ratios points we are going to take. So 0.382. 0.382. Then 0.5. 0.5 multiplied with this. All these are the Fibonacci ratios I am taking so that we can identify the trend as per the Fibonacci ratio. This into 0.618. So this into 0.786. This is how you used to draw the Fibonacci retracement. So same thing I am going to do. 786. And this is the 100% retracement. Now my point is, I'll be finding out the upward trending points or the upward retracements and the downward retracements. So I'll be finding out 6047 added with this one. So this was the upward trending points or the upward retracement levels, and the downward retracement levels will same way. 6047 minus this one. So same way we have calculated. So before the Monday's trading begins, we have calculated these levels, and this says as per the Fibonacci price point, 0.382 confirms the trend. If Nifty opens at 6085 above, then I'll say that today the trend will be up and it has the potentiality to take me till 6149. Same way, if the Nifty opens Monday on 6023 below, I'll say the trend is down, 6008 level, then I can say that trend is down this level, and it has the probability to bring down the Nifty to 5945. This is what it says. So as per Fibonacci principle, we have concluded 0.382 retracement is the trend confirmation point, which is sitting at 6085. Once Nifty opens at 6085 above by a couple of points, 8687 or whatever may be, then we can expect the Nifty to touch 6149 level. If the Nifty falls below 6008, then we have all probability to fall down till 5945. This is what we got. But we do not know what happens on Monday. Monday, if it happens with the range between 6085 to 6008, then we are quite happy. But suppose, assume it has opened at 5984 or 6109 beyond our calculated point. What we have to do? In that case, assume it open at 6115. Assume it has opened in this level. So what I have to do here, that because it is not as per my calculation, so I have to just change the last record to 6115. So I got a new level. Where my sell signal is 6078, buy signal at 6151. Assume it has opened at 5950 on 21st. So just last record 5950. So I got a new level. So only based on the openings I can change these data points of last record. What is the demerits of this method? Once you achieve all the targets during the day, you are helpless. You can't able to do a recalculation based on this. Second most demerit is, it takes the past 10 days data into account and gives you the volatility in a particular day. In that trading day, if the volatility falls down, say 1.68 we have projected, but for the day, say within 1 hour we are getting only 0.5%, or the volatility started shrinking for the current day, that time we may not get any trading opportunity because these levels will never come. And even though we are getting one entry point, we will never achieve the targets because this volatility is not a real-time volatility. This is being derived from a historic data. So it has these two limitations. In a particular day, if the volatility is shrinking, we will not get any trading opportunity. Focus on my wordings. You will not get any trading opportunity. That doesn't mean that you will lose money. You won't get any trading opportunity means you won't get the chances to enter the trade. So anyway, it is not going to affect you much. And once you achieve all the target, one part of the success is already with you, then never worry for that. So tiger also leaves a part of the flesh for the jackals. So you can say part of the success you got, part of the success you have to forego with this. So this technique has these two limitations. So this is what we have done for the Monday market. Let us see for past data, investigate for 2-3 days and see what kind of success it has given. I have taken from 5th September to 19th September. Let us see for 20th September what it has offered. 20th September it has opened at 6130. Made a high of 6154. Made a low of 5950. It was and 37 and 20th September, which is the RBI policy date, which was a very critical day for us. So it opens, didn't give you a buy signal. This price point never comes. Once it gives a breakout here, you have calculated till 6050. Definitely you could have achieved that level comfortably during the policy announcement. It has just dripped below 5 to 6,000 below, and then it has bounced back and closed at a specific price. So all in all, I can conclude here, in this critical day also the sell side breakout has given and comfortably it has achieved all the targets without giving any stop loss triggering action. It's opened at 6130. neither in buy signal above nor sell signal below. In between this and after this point, price point, after this the opening, only this price point of 56108 would have come and you have achieved this much. Now let us move to the other day. So sell side you achieved all. So till 18th September I have taken. For 19th September your price points was given at your price points buy entry and sell entry as set at this particular level, and optimum you have expected this one and this one 5847 and 6015. You opened at 6077. So your opening was quite high. So let me, because this is a, you have projected till 6015 but you are opening at 6077. So this is a point we should have changed this price point. So our new level is till 6174 and new downward level is 5979. Buy entry set at 6114. Expected 100% retracement expected 6174, and day size suggests that you have gone till 6174.8. So all in all, last traded price was 6145. I can say almost 100% you have got in the upward direction on 18th September. 19th September you have got downside all. 18th September upside all targets you have achieved. Now go back to the 18th September, take the value from 3rd September to 17th. Buy signal was placed at here and sell signal is placed at here, and optimum target level was this one. So this one is the optimum target level in the upper side. Same way the optimum, the minimum target level in the downside was expected here. You opened at 5890 on 18th September. Highest we have closed, recorded 5945. Last traded price was 5931. So partially we have achieved, we have not achieved the entire successes. So out of this 3 trading days, one day was a, and stop loss has not hit 5850, stop loss also didn't hit. So partially we have achieved. Other 2 days, those were the very critical days of the Fed Reserve's data, and then after the data of the RBI, on those days also we have taken very good successes in this. So this is what we have triggered, and this is what we have achieved. You can take any month's future. It is calculation is any month future is a price. You can't say that Nifty is going to be traded in terms of gold from the next month. There will not be any price terms on that. So this is the success of this method. So what we did here, what is our role here? We have just modified this same concept to a greater accuracy level. So what we have done, so we have given you a automated software using this volatility. So it has, you can use in the equity, stock, index, currencies and other things. Some fine tunings we have done, when to use GAN, when to use Fibonacci, when to use Elliott. Suppose you are just selecting any symbol, you have to just load the data, because today market is not there. So it may take some default data. Once the data is loaded, it will alert you, then just hit the button to calculate it. So buy entry has placed, sell entry is being placed, trailing stop losses is being placed, and here one more very important information we are getting. Probability of going up. What is the chances at this particular time that it will go up? What is the chances at this particular time it will fall down? This particular time, the probability or the chances to go up, chances to fall down is also given in this particular thing. Also, you can say how I can use it. Suppose you got a buy entry at 10,787. Your stop loss is being placed at 10,642. But probability of going up is 44. So you must suspect that breakout. You must suspect that breakout, though I am getting a buy entry, but probability of the chances of going up is 44%. So I may get a false breakout, may not achieve the first target also. I may slip and come down to the selling entry price. But same time, I cannot ignore the calculated points. So what I could, as a wise trader, what I can do, let me buy one 10,000 Bank Nifty at 10,787. Same time, I also will buy one put option, buy a put option, because probability of chances also may come true, or my calculation may come true. Buy a put option of strike, say 10,600 at this particular time at XYZ, whatever the premium. If my calculation comes true and I am going till 11,200 or any of the first, second, third target till this point, then definitely put option could have given me some losses. But if there is a reversal from here, 700 to 642, instead of losing the situation, if you bought it and stop loss is here and probability of going up is less, in that situation, what you can do, buy a put option of 10,600 nearest strike, and same time also you be long in the future. So nothing wrong in this part. If the buying side gives you the successes, then put option will create little bit of damage in the premium front, but it won't give you losses. Net won't come to losses. But if there is a reversal and if it comes to 10,642, then put option can protect you to a great extent. 60 to 70% of the losses what you incur in that future trade can be recovered back. So that is what I can say. So this is how we can use this thing, and you can also each time you can follow the trailing stop loss method. Trailing stop losses also you can follow. This each point we are giving for every target what will be the trailing stop loss, that also you can follow. Protecting the trade also you can follow. Suppose if you are getting a probability of going up and you are not convinced to add an option into that, then I will say that avoid that trade. Probability of going up is less, still you get a buy entry signal, then you don't want to take any option with the future, then avoid that trade. See for some other counters. Avoid that trade and see for some other counters. That will be the best idea. If you do not want that, yes, with future again I have to add one option, then how it can be. I am not that much confident in that option part, then better you avoid that trade and see some other counter. Fine. So the movement of the price will be always sudden, Mr. Sukhpal Singh. Sometime it will give you the breakout and may not give any target and come back. Sometime it will give you a breakout and give you 100% of the target. That is the nature of the market. Nature of the market, price will not be static. Neither Ranjan nor God nor the Prime Minister of India can say that Bank Nifty you should trade above 11,200 and you never fall below 11,000. That nobody able to make it. So market is dynamic. It is driven by the demand, supply, traders' emotion and fund flow into the system. So it has to change. So it is our duty how we can protect ourselves. It is our duty how we can make money through specific processes. Fine. So this is what we have done. Now I'll just move into a second part of my analysis, which is on the options part, how we can do the options trades using this volatility principle. Normally we have different option pricing models: Black and Scholes, Cox-Roach, Robinson, binomial, equal probability. So for the intraday option trading, this pricing model is suitable, binomial option pricing model. So the way you have done this analysis, how we can do this same way analysis for the options? What are the steps in this? Identify the current trend in the market through that Fibonacci or Gann process. This will, once you identify the trend, it will help you to choose an option strike and thrive. So this is what it will do. Analyze the implied volatility of the option with underlying asset volatility. This is also one part, which will tell you whether that option will give you profit in intraday trade or not. This is the second step. And the premium behaviors, when the underlying asset price like Nifty, Bank Nifty will move from one level, how the premiums can behave at each level. So this is what the intraday option trading technique you are going to do. So what it happens, just let me explain it with one small example. So say I have taken for the index future, I have chosen Nifty, I have just loaded this data. So I'm just loading this data, I'm demonstrating it with our intraday option trade software. The way you have done future trades of things, I'll be taking the question and answers, but it will be in the last part of our event. So just to see what happened here, we have taken the futures. I'll analyze the future. What it says: currently the volatility is 32%. Above 6073, this will be in uptrend. Below 6021, it will be in the downtrend. This is what it says. Currently it may be trading at 6047 because market is not there, so we are at 6047. So once it moves above 6073, I'll think of buying a call option or selling a put option. Once it falls below 6021, then I'll think that the trend has against me, then I will be thinking of buying a put option or selling a call option. This is what I'll be doing. Assume I have gone to 6073 level. 6073 I crossed. So what is the nearest option? Nearest call option. So here I'll be just going for 6050 is the nearest option. Premium is 67. Analyze option. So this says that I must buy this option at 81, keeping a stop loss of 54. These are the targets, but it says that intraday trade is not recommended. Why? Because in the second point I have told you to analyze the volatility and implied volatility. So whenever this implied volatility and volatility differ by 33% from each other, means either this one is higher by 33% or this one is lower by 33%, if that relationship is not maintainable in that 33% band, then you must not enter intraday trade in that particular option at all. Even though if you enter, this expectation of 89 will not come, 97 will not come, 105 will not come. So even though if you enter, though Nifty will move to suppose 6110, you have expected 105, you won't get 105. You may be getting some 90, 95, 92. So your expectation won't come if the implied volatility and volatility both are not establishing a tradable relationship between them. So previously I used to tell in all the seminar, you calculate 33% and see whether they are that option is tradable or not, means that option will give you some benefit in intraday trade or not. So here we automated, it says that intraday trade is not recommended in this particular strike. Rather you should choose some other strike. Suppose I am telling that 6,100. So analyze, this also doesn't give me. Analyze option, this also doesn't give me. These call options are not giving me any kind of trading opportunity. Let me move to some of the put options, because the implied volatility and volatility is not in a suitable band to give you. So here you just see it is in a suitable band. Even though if it is giving you a breakout at 82, you must buy this put option. It is in a suitable band. Implied volatility and volatility must be in a suitable band, must be in a comfort zone, so that you should enter trade happily and you should come out from this trade happily. Volatility, whatever NSE gives, it is different, because that is not real time, that is not being taken from the last 10 days data. Whatever we are giving, it is a real time volatility, and NSE is taking past 365 days data and it is giving you that volatility. That's why NSE's volatility and our volatility will be different. NSE takes 365 days. We are not taking 365 days. So this is what our system, and I'll show you some of the contract note and some of the solid evidence to prove this method. So before going to that part, let us spend a couple of minutes to understand our products, services and events which is lined off in this particular coming months. So right after that I'll be joining you.
Eight, namely investor course, technical course, Elliott wave, Fibonacci, GAN, future and option pair trade, volatility and integrated tool. All these products are having, as mentioned, number of DVDs and books and softwares. Out of these, the seventh product, volatility, this is the one what Mr. Ranjan was showing you just now and has been explaining today. Mr. Ranjan is the innovator of this technique called volatility technique, which he himself has experimented for the time duration of last 7 to 8 years. So it is not a very new technique and all. And this technique he has been proving in the public domain for last 7 to 8 years. Now it is in the latest form available in the form of a real-time software. The price of these products we have mentioned, as you can see, 1,500, 3,500, 6,500 like that. So if you buy the entire course at a time, then we offer you around 51% of discount, where it costs you 12,000 rupees. It includes all our automated software. I must make a mention that we are giving real-time softwares for GAN, we are giving real-time software for pair trade, we are giving real-time software for volatility and also for integrated tool. Integrated tool is the tool where all the above varieties as well as some additional varieties of software, total 18 tools will be available in a single platform. All are data automated, and that costs you 6,500 rupees for lifetime, having annual maintenance of some additional cost. If you want to test any of these softwares, instead of making the investment for the yearly subscription, just you can make a monthly subscription with a rupees of mere 500 rupees per month for GAN, otherwise for volatility, and check the efficiency of the tool. If you are convinced, then you can go for an yearly subscription later. The monthly 500 subscription is valid for volatility and GAN. However, for integrated tool and pair trade, the monthly subscription will be 750 rupees. Wish to buy the monthly subscription or yearly subscription, please visit our website. We have the payment gateway available there. You can put the make the payment there. Otherwise, you can take these numbers of Chennai, Mumbai and Gujarat. For Mumbai and Gujarat, we have our efficient distributors available. You can contact them too. Coming to our events. there is a free seminar, public event of Mr. Ranjan going to be held in Chennai on 6th of October 2013. The topics, as you can see, art of pair trading, win the intraday using volatility GAN and Fibonacci principle, best procedure to make money in future and options strategy. These are the topics he will be covering. It's a 3 hours program on 6th of October, Sunday, 10 a.m. to 1 p.m. And mind it, it is an absolutely free event. Come free, learn free, and go free. And I'm happy to announce this is for the first time we will do the live webcast of the event from Chennai. So if you are not in Chennai, you are not able to participate in person, then please do not worry. Visit our website. The link will be available there on that same day. The live webcast of the event you can see in our site smartfinanceit.com. In the home page itself, the link will be available. Next week onwards, that link will flag in our site. So happily you can participate in the event, and you can see question hours will be also there. So experienced traders will be coming. They will ask their questions, and Mr. Ranjan will be attend those queries also. So do not miss the opportunity. If you are anywhere in and around Chennai, then please do come to the event. Otherwise also do take advantage of the live webcast. It is for the first time public event of Mr. Ranjan is going to get a live webcasting. We have a paid seminar also. We have 2 batches scheduled for that. Batch 1 is offline, which is going to be held in Chennai. Batch 2 is online. And dates you can see. For offline batch, it is 20th of October. It will be a full day, 10 a.m. to 4 p.m. time. Batch 2 will be online, so 23rd, 24th, 25th and 26th, 4 days theory session will be there. It will be followed by 3 days live market hour practice session. Whatever theory you will be taught during the event, those things will be shown in practice on these 3 days during live market hour. For detail of the topic and other things, please visit our site. Under seminar link, we have put all the details. And the need of the paid seminar is that because many things we offer you free webinars, free seminars, free articles, videos. The innovator himself is presenting before you and proving the efficiency of his innovation time and again every month 2-3 times. Still, something is there for the paid seminarians. Why? Because it is beyond the possibility of explaining each and every of concepts in the free events. So because of for the ifs and buts of those concepts, if you want to learn the more refining definitions and applications of those concepts, if you want to learn, then the paid seminar is the requirement for you. The fee, as you can see, 4,000 rupees and 3,500 rupees, 3,500 for the offline batch and 4,500 for the online batch. However, this fee is applicable till the end of this month. So if you are interested, please do not wait and enroll yourself. Another good news for the traders, every month a few hundreds of calls we get for option strategy software. As the demand, Mr. Ranjan has innovated a new tool called Option Strategy Builder. We are happy that we are going to release it on 6th of October during our Chennai web seminar. So Option Strategy Builder, it is the only one tool in India to give you the strategies on option. Mind it is the unique tool in India to give you option strategies. And you can see there is a package we are giving along with the tool. You will be getting one option strategy software. 3 hours option course will be there, how to use the software. You will be getting a book on future and option strategy where 22 strategies will be explained with Indian market example. 15 days exclusive support from Mr. Ranjan himself by email. After using the tool, if you have any query, you put the mail and Mr. Ranjan himself will attend it for the first 15 days of your purchase. Besides that, there will be 2 exclusive pre-recorded lectures on option strategy for the buyers every month, and it will be given for up to 3 months of the purchase. So all this package costs you 10,500. On top of this, A very good discount we are offering. Pre-releasing booking price is only 6,500. Remember, this is available till the end of this month only. 6th of October is the releasing, but do not wait up to 5th of October because this pre-release booking is getting over by the end of this month. There will be an annual maintenance for software, as it is mentioned, 3,500 rupees. That is applicable from the second year onwards. So by 30th September, do not...
I should get some money out of that. So I trusted those buyers. I said that, okay, let me test on this front also, whether my tool works on this or not. Whether the promises given by the Smart Finance, the tools developed by the Smart Finance works for the traders or not. So time to time we used to investigate, re-enter. I personally entered the market. So this is though slightly means some may say that yeah, maybe it is wrong to present this thing, but it is better. This is my contract note, my name. Most of you knows my name. This is my office address, everybody knows, and it is in the website. This is a contract note issued by one of the broker. This contract note generated on 13th of September. I have just traded in one lot of the 5,900 call option, made a profit of 1,094. Same way to identify the trend, future trend, decide upon a strike which I have to enter, at what price I should enter. This is what I have done. 13th gone. Then I have just September dates also, let me say. 13th is Friday, 14th, 15th is Sunday, Saturday and Sunday. So next working day falls on 16th. 16th also same strikes I have done. 5,900 strike. Consistency, more consistency I maintained here. Same strike, 5,900 strike I entered and I made 949. Bank Nifty also 10,500 call option I entered, 1,732. In fact, I sold first, buy next. So this is on 16th in the next day. Consistency, as trader says that you show us the proof, you show us the consistency, then we will believe on your concept. So that is what I am showing. 17th September. So 3 days I am taking. 17th September, same way I did. 927, same strike of 5,900 call and bought 50 at 79.75, 98 I sold it off. You can say 3,996 to 4,900, almost 900 rupees I made. So this also I highlighted, 17th 9. So this is the intraday trade. Consistently I did, and 18th also I think I have one trade. It is on the stock option, not in the Nifty. So stock option I decided on IndusInd Bank 17 and 28, 20 rupees 25 paisa. This also given me 1,600 rupees profit on that. So from 13th, 14th, so 14th, 15th was holiday, 16th, 17th, and in fact 18th. These 4 days I have just did a consistency check on this particular tool of option intraday tool, which is nothing but first it is doing the future trades here. First it is estimating the future values. Then only you can decide if the price goes above this, then I will decide on the call option. If the price fall below this, I will decide on the put option. I will have a check on this implied volatility and volatility parameter to enter to refine or get more success in this trade. So this process only I have done. So consistently I have maintained 3 to 4 days. I have just initiated the trades, and this is not a cut paste job also. This is direct contract notes. Copies is being taken and shown to you. Consistency I have shown in front of you. So this is what the trades of mine. It is not anybody else trade. This is my own trade contract notes. My PAN number, everything is given here. And this is my trade data. So in fact, if I will be telling that, okay, 1000 trades I have done, out of that, these are the filterings you can do and see these are the trades, then it may be injustice. I have done only these trades, no other trade is being done in this particular trading account. So that it should not say that, okay, Ranjan has many trades, so he has not done with a objective to intraday trade, rather cleverly he has presented it. No. Only these 2 trades is being done, these 3 trades is being done, intraday perspective, using the same tool, consistently because every day I don't have the time to sit in front of the terminal to just with one lot, because I have other commitments too. So, just to check the efficiency from Friday have started, 13th, 16th, 17th and 18th, and in fact 19th and 20th was highly volatility zones, and we have opened off quite high gap up and gap downs, all these things has been created. So that's why I have just avoided these 2 days. I have not done any trade in these 2 days, especially for intraday. So this is the consistency of this thing, and it has predicted the future level. So this also gives you an indirect proof. Yes, future also worked on those days. Then only option has performed. Call option 5900 has performed because the future has worked on that days. If Nifty future could not have performed, then this call option would not have given me any success at all. So this indirectly proves or claims 2 things. Future also performed on that day, option also performed on that day. So that is the consistency check we can give. But beyond that I cannot give. If someone says that you do for 10 years and prove me, then after 10 years I am going to buy your 3500 worth of software, then this is a ridiculous demand that I can't satisfy. So that nobody can able to satisfy also. So this is, we have to do some random trades and other things. So that time I have just done it. So, and I have shown you that. Now I'll move into the option strategy builder. We have tested it also. So what it does, it comes with some of the, in futures and options book, I have given 22 option strategies. 22 option strategies for Indian market. That 22 strategies also will be mechanically programmed here. And Mr. Steven is saying that so he is telling that his view on the softwares and the options, Mr. Steven. So Mr. Steven, who is one of our customer, he is giving his open view on this thing. And I am pretty sure those who are not get benefited, they will never come for these events, or they will definitely say that, no, this is bad, he is cheating. So we never hide any concept, we never put ourselves into a sandbox and say that, yes, our tool works. We validate why it works. So this option strategy tool I am going to tell. This is as all of you know, option strategy means buying certain call options or put option, or selling some call option, put option, or sometime you will be buying one call option, one put option, sometimes some future with option you will take. So we have devised a 5-leg strategy. 5-leg means any complex option strategy you can able to form with its Greek view and all. This is just a prototype. The actual tool will come with lot more features. It is just a prototype. Just to demonstrate you, I have just kept it in my desktop and we are just testing that. So for that reason only, this is a testing thing is being kept in my desktop. So I have chosen suppose index future, Nifty, say October series we are taking. We have tested and immensely it has benefited me also. Two trades I have done as for this thing, and it has benefited me immensely and it has given me excellent profit. That trade contract note also I am going to show you. So see, I am just going to take a call option here. Data has loaded. I am just going to take a call option. I am buying one 6100 call option. Say buy. One lot I am buying. I am buying a put option of 6,100. 6,100. Actual tool will give you all those premium, all those things. I am buying it, and this too also one lot. I am going to hold it for 3 days. Say I am going to hold it for 3 days. This is what the strategy is. Once you open up any option strategy book, that will be telling you a combination of buying a call option, buying a put option, selling a call option, selling a put option. That is what. Sometime it will be two legs, sometime it will be 4 legs, means 4 different strikes. Sometime it will be 5 legs, means 5 different strikes. So I am just taking this thing 3 days, just hit a calculate button. This says, currently, this is October series. Net investment is 18,000 if I am buying a call option and put option. Holding for 3 days. Nifty has the chances to move 6153 in this coming 3 days. And 6190, 6212, 6262 till 6,400 expanded target during these 3 days most optimistically. Same time it has the chances to 6028, 5991, 5960. So these levels also will become more intelligent and more advanced in the real software. This is being taken with a testing view, but once you take the real software, once it releases, so it will give you more intelligent levels, not this kind of levels. You will get more intelligent levels. So if I am buying a call option and put option, holding for 3 days, if Nifty goes to 6153, I will be having 17 rupees profit. If it falling down to 6028, I will have 900 rupees losses. Same way, if it goes to 6190, I will be having 563, 947. If it goes to 5400, I will have 8,400 rupees profit. Same time, if it fallen down to 5,700, I will have 3,500 losses. And these are the intermediate losses in between also I can get, and profit I will get. So this is a simple call option put option. Suppose if I am buying a future also. I am buying a future. Say I am buying a future here. And also lot size is 1. 1 lot future I am taking and calculating. So my net investment changes. My profit loss projection changes. Everything is going to change here. If I sell a future here and buy a call option and put option, just this also gives me a difference. Any strategy you can form, not only that, it has a Greek analyzer. Once you click here, you will see that your strategy, what is the net delta of your strategy now, and at this point, and how your net delta is going to vary from here. You can do individual options Greek analysis also. The strike what you are choosing, that strikes delta, that strikes gamma, vega, theta, everything individual 5 options what you are having, that 5 options strategy, this 5 thing also will give a button. You can analyze before that what is the delta, gamma, theta of this strike, so that you can do some lot adjustments. Any kind of strategies you can form, any kind of strategies presented in any of the futures and option books you can form. Well in advance you will come to know what is the liability. Well in advance you will come to know what is the reward I am going to get. And it is protected. It is protected. You will come to know, yes, if it goes to 5,400, my losses is 11,000. If it comes to 5,700, my profit is 22,000. Risk reward is 1:2. I should enter this trade. So you can do any formation of the strategy in this. And it is more simpler. Actions only you have to give. What you want to buy, what you want to sell. Which strike you want to buy, which strike you want to sell. How many lots you want to do, that also you can say. Suppose if I am doing in this order. Say, assume I have just loaded the data once again here. I am just going to, so I am just going to buy one future. I am going to buy one future, one lot future, and I am going to put option. Say I am just going for a put option of 5,800. I am going to buy 10 lots. So this is also a strategy. I am going to hold it for 10 days. So calculate maximum 10 days period. So this says once you are going for upward journey, if you are making, this will be the profitability, this will be the liability. Any bullshit strategy you can form, any strategy, whatever comes to your mind, that you can form. and you can also have an enhanced Greek analyzer. If it goes to 6,800 also I'll be in profit. If it comes to 5,300 also I am profit. But in between I have the losses. Like this is the band till this point I'll be at a losses till 6,500. So it is not viable now. Same way if it comes down to 6,000 after initiating, if it comes to 5,700 level, then I'll be at a profit. So more realistic values you will get in top of that. This is called your option strategy builder. This is how it will help you. You will be given a pre-recorded training on that, because this required when you should form what kind of strategy. That is also required. So you will be given a pre-recorded training on that. You will be given a dedicated supports for 15 days to understand the software. But after installing the software, if you are sleeping for 1 month and saying that you give me the support, it won't be. Once you activate, be active on that software for 15 days dedicatedly. You take the supports through email. Yes, I am finding this problem. Yes, I am finding this strategy, or whether this strategy is correct or not. And for the 3 months period, all those recordings I will be sending based on this software. What are the best suitable option strategy for that particular month? 2 times I will be just guiding you. So 2 strategies also you will get from me for 3 months period, so that it can enhance your skills. So this is what the strategy builder, and I have just given some good trades also I have done, and it has given some successes also. Let us have a look on that. Let us have a look on that. So as some of the trades I have shown you. So say just let us see one trade here. Many option strategies I used to initiate. 19th and 20th I did. Assume this is the strategy. 19th, 2 o'clock, this strategy I have initiated. This block you can focus on. Focus on this block. I bought a future September, 1 lot 6156. I bought 10 lots of this put options at 31. See the benefit of the strategy. You need not have to be, so 10 lots means now 300 points I am just taking in the put side. So some amount of losses will be there, because I was expecting that there will be a RBI policy meet. So anything can happen. So if it happens with respect to the market anticipation, then it will give us a very good profit. So not only this Nifty, I also taken for the Bank Nifty 11,000 put option I have taken at 155, that is to 6 lots. And Bank Nifty I was having 2 lots buy, 1 lot sell, so definitely 1 lot buying side I was having. So because earlier some positions was there, I closed it off. So for that reason only. What it has awarded me on the 20th. This is 20th. This is 19th. 19th I can show you here. This is 19th and this is 20th. Benefits of the option strategies. 6,000 put option 10 lots which is being bought at 30 is sold at 80 rupees. Same time Nifty which is bought at 6,154 is being squared off at 5982. So 22 and 154, 164 points I lost in the Nifty, whereas 50, if I am saying here 50 into 10 lots, 500 points I gained here net in the put option. 164 points I lost here, because RBI policy was there, most volatility was expected. So with that view only I have taken this thing. So net it has given near about here 30 is 200, 300 points, near about 300 points, 15,000 rupees it has gained me. Bank Nifty which was 10,659 it is being squared off, and the call of put options which is being taken at 156, it has gone in 380. So 156 to 380. So roughly it has given 19,000 post RBI's view. If I could have held it for some more time, I must have got some more profit in this. So this is the strategy's benefit. So this is in a testing phase. In this particular tool only, I am just going on testing these strategies. So 6th will be coming with the actual tool. All kind of strategies I have formed, because 2 days I have shown you. Many other contract notes also I have possessed with me. So this many 5 leg strategies also you have formed. So somewhat fine tuning will be done in this target points, format projected points also will be there. Some more features will be there. But the prototype will be like this. You have to just load data, select what are the things you want to form, how many days you wish to hold the strategy, hit a button, calculate, and you will get one Greeks here, and you can see what is the net Greeks here. So you can form net Greek analysis and other things also you can do, but you will be given a proper training on that, how to use this tool, because this is a very advanced tool which takes care of many things of protecting your capital to a maximum extent and rewards you precisely as you have calculated. So that is the benefit of this. So this is how that tool will be. Any questions on the subject?